One, two, three, action.
This is so frustrating. I can't get this problem right. I hate accounting. I wish someone other than my family, friends, classmates, or professors could help me.
If you need to learn accounting and you're feeling kind of stressed, the accounting superheroes will try to do their best to help you learn the equation and all its different parts. We are the trusty superheroes. Come on, let's start.
Whoa! It's the accounting superheroes.
I'm Credible Credit. And I'm Dazzling Debit. And we're here to help you learn accounting.
Alright!
Let's get started. What's the first part of the accounting equation?
Assets, obviously.
Assets equals what?
Liabilities and owner's equity?
The accounting equation! What's the first transaction?
Thanks for asking, Dazzling Debit. First, I acquired $20,000 cash from the issue of common stock.
What accounts does that affect?
Cash?
And?
That's it.
No, every transaction affects two accounts because assets has to equal liabilities plus owner's equity. If you don't affect two accounts, the sides of the equation don't match each other.
Oh.
What other account is affected?
Common stock?
Debit cash $20,000, credit common stock for $20,000, and now debits equals credits. What's your next transaction?
Well, I purchased $56,000 of inventory on account.
What are your two accounts that are affected?
Inventory and accounts payable.
You debit inventory and credit accounts payable so that debits still equal credits. What's your next transaction?
Well, I sold inventory on account that cost $35,000 for $57,000.
So how does this go in the accounting equation?
Well, I know it affects inventory and cost of goods sold,
What else does it affect?
accounts receivable, and sales revenue.
Good job! Why can't we just debit accounts receivable and credit sales revenue? Why do we need inventory and cost of goods sold in the same transaction?
I don't know.
Well, it's because we need to recognize expenses in the years that they happened. And that's called
I don't know.
the matching principle! We debit accounts receivable and we credit sales revenue. We credit inventory and we debit cost of goods sold. So what's the next transaction?
Well, I collected $47,000 cash from accounts receivable. So I would debit cash and credit accounts receivable.
Great job! So, you should debit cash for $47,000 and credit accounts receivable for $47,000. So, Mike, what's next?
Thanks for asking. Next, I bought equipment for $40,000 cash with a salvage value of $5,000 and a useful life of 5 years. I don't know what to do.
Well, what do you do first?
First, I would credit cash, and then I would debit equipment.
Good job. Next, we have to find out how much you're going to pay for accumulated depreciation. How do we figure that out?
No clue.
Well, we take how much we paid for it, which was,
$40,000?
and we subtract the salvage value from that.
$5,000?
So what do we get?
$35,000?
That's how much it's going to depreciate over its total life. Take $35,000 and divide it by its useful life, which is...
5 years?
So how much will we pay each year for depreciation expense?
$7,000?
And that goes along with the all-important matching principle! So we debit equipment, we credit cash, we debit depreciation expense, and we credit accumulated depreciation. But remember, depreciation expense doesn't happen until the end of the year because...
It's an adjustment for the end of the year?
Exactly, and adjustments only happen at the end of the year.
But wait, I don't get one thing. Why does accumulated depreciation have a normal balance of credit?
Because it's a contra asset!
What do you do next?
I bought supplies for $2,000, but at the end of the year, I only had $500 worth of supplies left. I don't get it.
Well, you have to make an adjustment. How do you make that adjustment?
Well, I'm not entirely sure, but I think I have to credit cash and debit supplies.
We need to credit cash and debit supplies.
So, how do we adjust for the amount of supplies that you use up during the year?
I don't know.
Well, since you only have $500 left in supplies, you need to debit supplies expense for $1,500. That's because of
The matching principle!
dun, dun, dun. You need to credit supplies and debit supplies expense.
Alright, frustrated Fred, there's only a few things left that you have to do in order to finish up this problem.
First, you need to total all the accounts.
To make sure assets equals liabilities plus owner's equity.
And also make sure that your debits equal your credits.
Then, all you have to do is make your 4 financial statements and you're done!
Excellent job, Credible Credit.
Awesome job, Dazzling Debit! Now we can do the accounting dance!